Hello everybody, Tortoise Investing coming at you today with 3 of the best stocks to buy now. Yesterday was a massive red day. Nasdaq down 3.52%, S&P 500 down 2.27%, Dow Jones down 1.19%. And as you can see just on my watch list, a sea of red. We are talking some big names down big time. Broadcom was down 7.59%. We got Canadian National Railway down 3.48%. Google was down over 5%. Moody's was down 4%. Nvidia down 6.8%. Tesla down 12.33%. Visa down over 4%. Ulta Beauty down over 5%. And this is just a little taste of what yesterday had in store. There are plenty of others that are down massively. So I'm going to take a look at 3 of them today that might be perfect fits for you in your portfolio. So if you're new, hit that subscribe button for me. Drop a like down below. Helps the video and the channel out a ton. And I greatly appreciate it. And if you are buying anything, comment down below. Let me know what you're buying. Let's talk about it. It looks like we might be in store for another red day. It looks like in the pre-market, VOO and the QQQ are down again. So fine by me. Red days are big sell days. If we have another massive red day, I might do some buys. So going to be sending out those buy alerts in the community tab. Without further ado, let's go ahead and take a look at the stonks. We are going to be taking a look at Ulta Beauty, Visa, and Google. Ulta Beauty down over 5% yesterday. I had a price target decrease. You never want to see that, but I really like this company long term. They have a great moat behind them. Let's take a look at their performance. Year to date, it's down 24% over last year, down 18.7%. 5 years, 4.45%, and over the last 10 years, up 300%. So this is a long-term compounder. So if we take a look here, adjusted free cash flow yield of 4.84%. Revenue growth, 15.42% over the last 10 years. That's very nice. And as you can see here, total stores are increasing year over year. So they open up smart stores. They don't just open up stores to be opening up stores. They make sure that they target areas where it's needed. They're not just going to open up a store that's going to get very low sales. They're very smart with their openings. Now, Starbucks, on the other hand, kind of opens everything everywhere, But Starbucks is doing it good. They're doing all right. I like Starbucks, a big position in my portfolio. But yeah, they are doing a great job with that. They are doing a fantastic job of cash allocation. Free cash flow over the last 10 years, growing rate of 26.19%. Very nice. If we look at it, the free cash flow per share, it is 29.5%. What's that tell you? That tells me they are buying back shares. Love to see that. EPS, growing at a rate of 23.51%. Again, this is just taking off like a rocket. This thing is doing very well. They have a little bit of debt, 1.63 billion. They have 766 million cash on hand, but their EBITDA is 1.94 billion. So no issue there. My general rule of thumb is I don't like companies that have more than 3 times their EBITDA in debt. If something major was to happen, they needed to take out debt. Well, it's going to hit them a little bit harder. It's going to be a little bit harder for them to pay that back. But Ulta Beauty has a wonderful balance sheet. Shares outstanding. Let's take a look at this. Buying back shares at a rate of 2.59% over the last 10 years. Love it. Absolutely love that. And I hope right now that they are just using every bit of cash that they got to buy back even more shares. Let's take a look at the quarter over quarter. See if we can get an update of that. 48.38. So they are buying back more. They bought back a little bit more. Nice. I like that. I like that a lot. And again, I hope that they are continuing to do that. This dips anymore, I might have to throw it in a portfolio. Might have to. None of this financial advice. I was doing research for investing, but I really like what I see with Ulta Beauty. Return on capital employed is just silly. It is silly. Look at that, 41.44%. Beautiful. And EPS growth from 2020, it says 3 to 2025. So I'm assuming that's supposed to be 4. We got 2313 grown to 2573. So that is double-digit EPS growth. Love to see that. And the revenue's grown from 10.01 billion to 11.56 billion, which is also double-digit growth. So they are projected by the analysts double-digit EPS and revenue growth going forward. I really like this company. I really do. Again, stay tuned. Might be some buy alerts later. Next up, Visa. I know this is another one a lot of people are excited about. Has came back down to 54. It is down over 4%. Let's take a look at the performance. Year to date, down 1.82 over last year, up 7.2. 5-year, 38.37 over the last 10 years. Another strong compounder, up 374.55%. Just a free cash flow yield of 3.32%, dividend yield of 0.79%, and a payout ratio of 5.56%. That is very low. Revenue growing at a rate of 10.74% over the last 10 years. Beautiful. And the total cards, there are a silly amount of Visa cards out in the world. Just put it in perspective, I think there's like over 7 billion people on Earth. Well, there's 4.4 billion Visa cards between debit and credit. So that's crazy. It's really nuts. Talk about having a moat. Every time you check your wallet right now, I guarantee you got a Visa or a MasterCard in there. I bet anything. But as you see, this is just continuously going up. And the thing with MasterCard and Visa, both, they don't have to really put out a lot of CapEx or advertising. Like, you open up a bank account to live, you're going to get one of these. Amazing. Love these companies. Free cash flow is growing at a rate of 22.68% over the last 10 years. Very solid. Free cash flow per share is 25.7, so that means they're buying back those shares. The EPS growth is 15.568%. Again, very nice. The debt, let's take a look at the quarterly for the updated on the debt. 20.6 billion debt. They have 16.64 billion on hand in cash. No issue there whatsoever. While we have this pulled up, we'll go ahead and take a look at the shares outstanding, which they buy back shares aggressively as well, down 2.11% over the last 10 years. That's the thing they do with their cash allocation. They either buy back shares or they give you massive double-digit dividend increases. And speaking of that, over the last 10 years at a rate of 17.92%, that is beautiful. Are you getting a raise of 17.92% from your job? Probably not, unless it's a massive promotion. But this is compounding at its finest. This is the ultimate set it and forget it. Add here and there and let the snowball effect work for you. And the switch back to annually. Return on capital employed, 31.16% for 2023. Very nice. Very nice. Usually averages is like 10 to 12%, somewhere in that area. This is doing very, very well. And EPS 2024, 936 grown to 1102. That is some double-digit growth. And the revenue growing from 34.92 to 39.36, and yet again ringing in with a double-digit projected growth. Love it. Absolutely love it. Next up, Google. Another one that I have definitely staring at and got my eyes on. Down over 5%. Let's take a look at that performance. Year to date, we're up 24.92%. Over the last 1 year, up 33.54. 5 years, up 177. And over the last 10 years, up 476%. Those who bought this in the 80s and 90s, I'm very jealous. I have learned a lot over the last year or two. Man, oh man, I wish I would have dove in there. Gosh, I wish I would have dove in there. I'm waiting and being patient, but I might start a position also in this very soon. Revenue's grown at a rate of 17.78% over the last 10 years. You can see here their cloud margins are improving. This was a negative margins business for them for a while, up till last year, and now we're in the green. So going forward, cloud operations is going to be adding to their bottom line. Free cash flow growing rate 19.92%. Free cash flow per share 20.55, which means they're buying back those shares. Very nice. EPS growing at a rate of 19.83%. And we'll take a look at the quarterly for the updated debt. They have $24.95 billion in debt. They have over $100 billion in cash. See, this is the reason I called Google paying a dividend a month before it announced it's paying a dividend. I was like, they just got so much cash flowing in. It gets so much cash in from advertising on YouTube. They're going to start paying a dividend soon. I can feel it, and they started doing so. And not much dividend growth because they've only paid a dividend twice. Shares outstanding decreased at a rate of 0.63% over the last 2 years, over 3%, though. They are increasing their share buybacks, which I love to see. Let's take a look here. 12.72. Are they still buying them back? 12.5. You bet they are. Very nice. And return on capital employed, 26.29%, which is very, very nice. Take a look at the analyst estimates here. We got 704 growing to 866. That is double digit. And revenue, $328 billion growing to $384 billion. Yet again, double digit growth. That's everything. That's three of the best stocks to buy now. Absolutely some great deals out there. I have got my eyes peeled. I'm watching some of these very closely, especially if we have a massive red day. Ooh, I'm going to have to do me some buying. Anyways, hope you've enjoyed that. Hit that like and subscribe button for more. Until next time, I hope everyone takes care. See yous.